Good morning, UPBOptionMillionaires.com. July 7th, 2014. It is a Monday, and stocks are having a little bit of a hangover from that long holiday weekend. We had a half a day on Thursday. The long 3-day weekend, we had that wonderful jobs report. Oh my goodness. The jobs that were gained. And we have this morning Bed Bath & Beyond coming out announcing a $2 billion share buyback, which really epitomizes the marketplace these days with cheap debt. Hey, buy back the stock. Who cares if anyone's buying products in your store? All that matters is that stock price. Look at the trading action we've seen as stocks have just continued to hit record levels. Really dull and boring. I've been talking about this for quite a while. Back in 1929, traders were jumping off buildings to kill themselves. These days, they just watch the stock market and really just snore themselves to death. No, really, it's kind of like watching paint dry. It's like, oh my goodness, a little tacky here. Oh, okay, I can touch it now. Oof. Well, that was riveting. So let's look at some charts. We have earnings season kicking off this week. We have Wells Fargo at the end of the week. We have Alcoa. I was talking about FAS. FAS is a triple bullish ETF. And you can look at the action we've seen actually in May 5th, 2014. You can look at a blog at optionmillionaires.com. You can see the support it was at. We also had JP Morgan Chase, which reports earnings, I believe, on Monday. Beautiful channel there, looking to head over to $60 level. Goldman Sachs as well, bounced off support, the same kind of May 5th area there. You can see it's at 170. It looks like it's consolidating here for a possible takeout at 180 level. Bank of America, lagging a little bit. It's trying to get back up to that $18 level. That's a 5-year chart. If you want to look from a longer term perspective, you can see this 1750, 775 level. Almost, I guess that's almost $18. Is going to be a tough nut to crack. But if it does indeed crack that level, look out. We can head into the 20s there for Bank of America. That's a longer term perspective. One chart I really want to bring up, and I talked about this, the tech wreck of 2014. And if you zoom in a little bit, let me just pull in a little closer to the 1 year because it'll look a little better there and pull off some of the studies. There we go. And you can see of course, this is the uptrend that we've been in since the lows in March 2009. And this is a broadening descending wedge I was talking about. When we finally broke it, we broke out in a big way. First, looked like maybe we'd double top here, but you can see we came across the high here. We kind of consolidated, made a move up to 92, and now we're breaking out. Looks like QQQ wants over 100, but it might take a little time. And also the S&P 500 breaking out. We were at the 198 level. Right now we're at, 197.75, something like that. We're pulling back a little bit, but it was a nice breakout. And it was kind of the normal head fake that we'd seen, the trading action we saw on Thursday. We sort of pull back. You see these candles down here to the downside, and then just kind of, resume the upside movement. We had a little volatility there at the end just before the close. Nonetheless, closed almost 0.5% higher, and I think at some point, and I talked about this in my video, I believe, last week, that we're so close to that $200 level on the SPY. It's just going to happen. It has to happen. It has to happen. The bond market pulling back from the highs. I mean, this has been a tough nut to crack. I haven't traded it recently, but nonetheless, look at that candle once it got up to this trend line resistance. So we'll see again, we're at the same kind of juncture we were before. I still think we're leading to the upside here out of this, but it could go either way at this point in time. And I think stocks are going to be ambivalent. They're not going to care. Whatever happens, it goes higher, bonds get bought, stocks get bought. It goes lower, the money comes out of the bond market, goes into the stock market. It's just pretty mind-boggling. One more chart I want to bring up here of the broader indexed IWM, which is the small cap. The Russell 2000 ETF broke over to 120 level, and then even on Thursday, despite the market rallying, could not get back to the levels that it was at the prior day. I think it was Wednesday. Yeah, so you can see the action. It was Tuesday when it hit the 120.50, almost 121 level. Pulled back. I'm looking for that move up to new levels that it hasn't seen since the financial crisis. Let's move on to some individual names. Caterpillar. Been talking about this for a while. I said once it broke that 110 level, it was going to go ballistic, and indeed it did on Thursday. Look at this. We broke through that line, came up. We're almost up 2% early in the session. We pulled back a little bit late in the session, but nonetheless, Caterpillar looks really bullish here on this long term. Look at that candle break to the upside, and then if you look from a long 5-year chart here, we've been consolidating. We finally broke it. I mean, this has taken a long time, and I think we're going to get up to the 115, then ultimately the 120 level, and who knows from there. It's going to get pretty wild. Boeing this weekend had a crash of some of its products on a train. That's going to be interesting. I haven't looked pre-market to see what it's trading at, but Boeing is going to be, again, this is a consolidation pattern as well. Who knows how long it's going to take to resolve, but ultimately, like every other consolidation pattern in this marketplace, it's going to resolve significantly to the upside. And look at some of the 3D printing stocks going crazy the last couple weeks. I talked about DDD at 46 down here. You can look at the chart that I put up at the blog at optionmillionaires.com, talking about the stock going over the $60 level and to 70 it did before pulling back. Now it's at about 62 here pre-market. I think this rally is going to continue. I think we're going to get up to the $80 range. SSYS as well has been moving significantly to the upside. Perfectly hit this trend line resistance, was acting as support previously. And so we look for another, once it can break out, we could be looking at new record levels for SSYS. So we have Wells Fargo reporting for the bell on Friday. Again, look at the trend here, especially since the end of 2011, start of 2012. This is the Abenomics low, and looks like we're consolidating for just another push up to the upside for Wells. And that's it for now. We have, earnings season really kicking off this week, but next week is when it gets really interesting. And I'll have some trade ideas I'm looking at for this week later on. Today, I'm going to put some charts up at the blog at optionmillionaires.com. Nonetheless, we're a little bit of a hangover this morning from the long holiday weekend. We'll see if we can do what we've done the best in this market since the March lows of 2009, is have a little bit of a dip and just buy it. Just buy it, baby. There's a great post on optionmillionaires.com also about that. Just buy it. Like the Nike slogan. You're tired. You're angry. You're hungover. Just buy it. All right. UPB, I'll be back. Everyone have a great holiday, post-holiday hangover, wake-up trading session, if that makes any sense. Goodbye.